Hello, good afternoon. Welcome to this special Moneycontrol broadcast, Closing Bell, with me, Yatin Mota, and my colleague
Santosh Nair.
Santo, as they call him. He's being modest by saying that he's Santosh Nair, but he's popularly known as Santo. If you talk about the markets, Santo, quite volatile today. 2-3 times we dipped into the red intraday, but we managed to close almost near the day's high. Nifty ending nearly at 21,700 mark with nearly 50 points of gains. Sensex also gaining by nearly 178 points. Nifty Bank almost a flattish kind of a move today, and in general the volumes also were quite dry, especially with counters like ICICI Bank and HDFC Bank, whereas the Midcap index continued to move 0.2% higher for the Midcap index, and when you talk about the small cap index, that moved nearly 0.5% or so. Advanced decline ratio of the markets 1:1, and if you talk about the sectoral gainers, next week we have IT majors reporting earnings, and ahead of that the IT index were the top gaining stocks and sectors today. Auto, real estate also tried to move in trade. However, some bit of profit taking in PSU banks, pharma and metal stocks. So when it comes to Nifty 50, Adani Ports was the top gainer, 2.5% higher for that one. TCS, L&T, SBI Life, all of these stocks are quite active in trade. In fact, L&T moved strongly in the last 30 minutes of trade on the hopes of bagging a $5 billion order from Saudi Aramco. That's what CNBC TV 18 reported. On the flip side, FMCG stocks like Nestle, Britannia, Marico were under pressure. UPL and Sun Pharma were also the other losers in trade. But overall, Santo, a quite active day, especially for the mid caps.
Well, yes, Yatin, also some bit of uncertainty creeping up in the minds of players, because on one side they know that the market has been steadily rising, and many of them who have been around for quite a number of years, repeatedly they've been cautioning that now this is the phase where market is getting into exuberant territory. So it makes sense to probably cut back a little, and in fact that's what we are picking up from the market, that most of the seasoned players, Yatin, they are booking profits, moving a part of the portfolio into cash, which is a sensible thing to do, because if there are any corrections, then you need to be in a position to be able to capitalize on that. That can only happen when you've got cash in hand. So that's while that's a very sensible approach being taken by some of the seasoned players, but when it comes to most of the newcomers or the new entrants to the market who have started investing after COVID, I think the general tendency is to still try and ride the momentum for as far as possible. So market very delicately poised at this stage is how I would put it, Yatin. Also, you mentioned the part about IT index being among the prominent gainers. So clearly the focus will now be on the IT sector. What is the chatter that you're picking up from the street, Yatin?
I think Infosys and TCS, the expectations are that this time the growth will be flat to negative, and the street generally was pessimistic in the second quarter itself, that third and fourth quarter probably would be weak, because there is no decision making on the part of overseas clients, especially in Europe and US, and those are the concerns. But I think the commentary this time is more important than the earnings, because there was a part of uncertainty in the first half of this quarter, and now given the fact that the US Federal Reserve has been guiding for a probable rate cut in calendar year 24, and probably things would look up in terms of Chinese economy as well as the US economy, probably that things augur well for the IT sector. So the client confidence, client ordering, what kind of hiring plans are there, because Santo, in the second quarter we saw the IT companies not hiring on a net basis. There were net
it's after a long time that we have not seen net hiring by IT companies.
So the second quarter was slightly bleak, and it threw a bleak picture for Q2, Q3, Q4. So we'll be watching out for the management commentary. But Santo, what are the stocks on your radar?
And one last question, Yatin, before we go on to that. Again, what is the overall chatter on pharma at this point in time? Selectively, we are seeing a lot of action there.
So Santo, if you look at Lupin, they are supposed to get a few drug approvals. So the street is hopeful on earnings. Aurobindo Pharma, they wanted to do a demerger of their injectables business for quite some time. That chatter is again reviving. If you look at Biocon, the ET reported that they will sell their API business. The company, however, strongly denied that. But ever since that news report has come, the stock of Biocon has moved nearly 10% higher. So there can't be smoke without fire. And I think, Biocon is looking at some kind of a fundraise or some kind of a stake sale in their special unit, so that they can slightly improve the balance sheet size. Today also, if you look at the stock, moved nearly 3% in the last 30 minutes of trade.
So again, quite an interesting picture that if you take the sector as a whole, the market is not really positive. But if you look at many of the individual stocks, there's a lot of announcement which is keeping it in the limelight. Well, and with that, we quickly take a look at some of the stocks on our watch list this afternoon, starting with IIFL Finance. Now, IIFL Finance has found a backer in Motilal Oswal Securities. Motilal Oswal Securities has initiated coverage on the stock with a buy rating and a price target of 800 rupees. Now, IIFL Finance stock has been struggling for a while now. Almost since last August, the stock has been fairly range bound. According to Motilal Oswal, the company is following an asset light strategy, and that should augur well for maintaining profitability over the longer run. And also Motilal Oswal is quite bullish on the fact that IIFL is following the hybrid model, which is a mix of both physical as well as digital distribution, which Motilal sees as a big enabler. Also, Motilal feels that the company has done well to manage its liability, and that it should be able to keep the cost of its fund low. It has enough levers to keep the cost of its fund low even in a rising interest rate environment, and at the same time it has a positive outlook on, it expects the net interest margins to be stable in the near term. And lastly, according to Motilal Oswal, the co-lending has improved the quality of earnings, and the brokerage expects IIFL Finance ROE to be in the region of 20% plus in the foreseeable future.
And that stock has been in focus, Santo, because IIFL Finance, we saw a lot of block deals coming in from Fairfax, the Prem Vatsa fund. I think they sold a lot of stock, and probably their last bunch was sold recently at 580 or 570 for that matter, and post that the stock has seen a good run up. But apart from IIFL Finance, the stock in focus is also Hindustan Aeronautics. UBS has today initiated a fresh coverage on the stock with a target of 3,600. Now, 2-3 big things. Obviously, we know that defense is a big theme, but UBS believes that HAL's order book from the current 80,000 crores will move to nearly 2.5 lakh crores in FY26, which means they should be able to triple their order book. Number one. Number two is the fact that their overall revenue growth should be more than 16% CAGR, and the margins should look up. In fact, they are expecting a 20% return on equity and a margin range also growing by nearly 20%. So that could probably be some consistency in HAL's earnings on the back of Tejas aircraft orders as well as the new light helicopter. So I think when it comes to the order book, HAL has sufficient orders on its hand, and probably from here on the earnings journey and the earnings momentum should start, and hence even from the current levels UBS expects a 20% upside.
Well, when the company had come out with an OFS recently, at that point many had said that maybe the top, maybe it would have made a temporary top, but I think this time what we are seeing differently is that despite the fresh supply of shares coming into the system, most of the stock, particularly in the defense sector, they have been able to maintain their momentum. And well, the last
Santo, I just need to mark HDFC's defense fund. Ever since that fund got launched, last year, people thought that defense as a theme more or less is done, or the run up has happened. And ever since that NFO got launched, I think the defense stocks even doubled from those levels. So I think the momentum really is quite strong in these defense stocks.
Exactly. And well, the last sector on my watch list this afternoon is the gas sector. Now, this has been one of the big underperformers, Yatin. If you look at all the three city gas distribution companies, be it Mahanagar Gas, Indraprastha Gas or Gujarat Gas, all three have been underperforming the market, and the reasons are not far to seek. Mainly gas prices have been quite high, and because of high gas prices, the margins of all these companies have been under pressure. And also because of high gas prices, for companies like Gujarat Gas, a lot of the industrial customers have been shifting to propane, which is a far more cheaper gas, because of which Gujarat Gas earnings has been hit. But now we have Morgan Stanley, which feels that better times for gas companies are ahead now. That is most likely because the gas supply situation globally is likely to be in excess from the second half of this year. And also Morgan Stanley is very bullish on the volume growth for both city gas distributors as well as gas producing companies. And among the top stocks on its buy list include Gujarat Gas, GAIL, ONGC and Oil India.
Absolutely, and the oil and gas stocks, also the PSU ones, are expected to give good dividends, because Santosh, today only in the newspaper I was reading, and my editor Neeraj Bajpayee was also saying that the divestment targets would be almost 40% of what was projected earlier. So the only option for the government to really take out money from the PSUs is to give a higher dividend for the March quarter or the Q4 start. So all of these oil-rich PSUs, ONGC, HPCL, BPCL, GAIL, who have been making loads of cash, probably will shell out good dividend also. So the expectation is that the dividend payout from here on should move up, given the fact that the government has more or less missed its divestment targets for the current financial year.
But Yatin, it's also quite surprising, which what many people in the market have been remarking about, is that a lot of small companies, and even in some cases quite dubious companies, have been able to raise a lot of money, whereas here you have the government with very credible companies unable to meet its divestment targets. So that is quite a mystery, I would say, Yatin.
Absolutely. This remains a mystery, but I hope the government is also smart. They are expecting some big moves or probably some good returns from here on as well. So they are saving the gunpowder for some other day. And let it be dry. With that, it's a wrap on this edition of the Closing Bell. We see you on Monday again morning with a daily dose of all the business news and updates. And for all your other news and business updates, stay tuned to moneycontrol.com.